Dirty dealings, corporate battles, consumer woes. This is Evening 5. Sime Darby Property said it will build and lease out a hyperscale data center at its Elmina Business Park in a deal worth 2 billion ringgit, marking the group's entry into the data center segment. The project is expected to begin in the second quarter and will be completed in 2026, according to SDP. Once construction is completed, the group will sign a 20-year lease with Pearl Computing Malaysia, a wholly owned unit of Singapore-based Ryden APAC, with options to renew for 2 additional 5-year terms. According to SDP, Ryden APAC is part of an undisclosed multinational technology corporation headquartered in the US. The data center in Malaysia will be situated on a 49-acre site within the 1,500-acre Elmina BP, the largest freehold industrial park in the Klang Valley. SDP said that the group and the Elmina BP were chosen based on strategic merits, including its 50-year track record in large-scale integrated projects, the park's robust infrastructure and prime location, as well as the group's financial strength. Group MD Dato' Azmir Marakan said the project aligns with the group's Shift 25 strategy to grow recurring income, enabling to expand its investment and asset management portfolio. He adds that it will also elevate the Elmina BP status as a premier industrial location for technology corporations, both local and international. SCP expects revenue from the project to be recognized on commencement of lease in FY 2026. The developer's share price closed at RM1.16 on Thursday, its highest in 6 years. The counter climbed over 8% following better than expected first quarter earnings. In a briefing, SDP said it is on track to achieve its 3 billion sales target for FY 2024, having already achieved around 32% of its goal. For FY 2024, the group is planning to launch new projects with a gross development value of 3.9 billion ringgit. Sime Darby's third quarter net profit jumped 41.7% year-on-year to 340 million thanks to higher sales and income from newly acquired businesses. Likely revenue for the quarter surged 63.4% year-on-year to 18.84 billion from 11.53 billion previously. Breaking it down by segment, EBIT at its industrial division increased by 52% to 359 million during the quarter due to an increase in product support and mining equipment deliveries, as well as profit from subsidiaries including On-Site Rental Group and Cav Power Group. EBIT at its automotive segment rose 5.9% to 180 million thanks to a surge in sales in Malaysia and higher electric vehicle sales in Singapore. Group CEO Dato' Jeffrey Salim Davidson said the group ended the quarter on a high note, with the industrial division continuing to be a key driver, leveraging strong prospects in the mining sector, particularly in Australasia. He added that this quarter also marked the UMW division's first full quarter contribution to the group, and that moving forward, its integration into Sime Darby will remain a key priority. Notably, the company booked a 2 billion ringgit gain on the disposal of Ramsay Sime Darby Healthcare and 251 million in after-tax gain on the disposal of Malaysia Vision Valley land to Sime Darby Property. Going forward, Sime Darby says that it continues to face challenging business conditions in China and also flagged cost inflation pressures and continued high interest rates as issues, particularly in Australasia. With all that being said, Sime Darby is expecting FY 2024's financial performance to be significantly better thanks to the one-off gains from the disposal of non-core assets. BFood incurred a net loss of 29.8 million for its third quarter, which marks its second straight quarterly loss amid lower revenue because of an ongoing boycott of its franchise coffee chain Starbucks Malaysia over the current Middle East conflict. In the last year's corresponding period, BFood had posted a net profit of 15.9 million ringgit. Revenue for the quarter declined 47.85% year-on-year to 138.65 million from 265.9 million previously. On a quarter-on-quarter basis, BFood's net loss narrowed from 42.6 million in the second quarter of FY 2024. No dividend was declared for the quarter under review. In addition to the Middle East conflict, the results were also due to the one-off loss of the company's entire equity interest in Jollibee Foods, according to BFood. Nonetheless, BFood expects its operating performance to gradually improve over the next remaining quarter for FY 2024. Public Bank has lost a case against a house buyer who sued the bank for terminating a loan facility agreement after the first disbursement. The court found that the bank failed to provide documents of purported falsified supporting documents and claims that the customer inflated his income, which had resulted in the termination of the facility and house purchase. As a result, the Kuala Lumpur High Court ordered the bank to pay close to 65,000 ringgit in damages to the house buyer, in addition to the sum the court will decide on after assessing the man's loss of the property and his subsequent loss of reputation on being blacklisted by the CCRIS and CTOS data system. Judicial Commissioner Raja Dato' Ahmad Mohzanuddin Shah Raja Mohsan also allowed a declaration that the termination of the buyer's facilities agreement on April 12, 2018 and other relevant agreements was wrongful and had no effect, and that the bank had breached its obligations under the agreement. Ahmad Mohzanuddin also ordered Public Bank to pay 30,000 in costs in allowing the house buyer's claim and dismissed the bank's counterclaim over the first progressive payment made by the bank. Out of the total damages, the court said that 20,000 was general damages awarded for defamation. The JC, in his written grounds for decision, said that the bank's failure to support its claims, namely that the supporting documents were falsified, was fatal. The JC said he was also perplexed as to why the bank still assisted the house buyer to obtain a new reduced housing loan of 70% of the purchase price, despite the earlier serious allegation of forgery. Public Bank has filed a notice of appeal against Ahmad Mohzanuddin's decision. Sugar refiner MSM Malaysia Holdings reported its second consecutive quarter of net profit as better selling prices and utilization offset higher production costs. Net profit for the first quarter came in at 41.7 million compared with a net loss of 35.9 million previously. Revenue improved by 54% year-on-year to 906.6 million on higher volume and prices. CEO Syed Faisal Syed Mohamad said that MSM remains focused on expanding its domestic market share by widening market channels, increasing industry outreach and enhancing consumer reach points. MSM is also actively increasing its export market from the present 17 countries to 25, reaching beyond Asia Pacific and South Asia into Africa, Europe and North America. However, Syed Faisal points out that the sugar industry continues to grapple with high input costs as freight rates remain volatile, further exacerbated by the Red Sea crisis. He also notes that while global raw sugar prices have fallen slightly due to improved production forecasts from Brazil, but still remain much higher than once manageable levels. Syed Faisal added that there is a need to ensure the joint sugar industry remains sustainable to secure the nation's consumption.